Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market. So on the gold market, the major surprise that we've seen on Friday was the upward performance. And actually, at the first glance, if you'll take a look at the data that had been released, nothing has suggested that gold should appreciate so high and so significant in the daily charts, because at the first glance, rising of the CPI numbers suggest more active Fed activity, more Fed performance on the rate interest hike, and which means higher interest rates that potentially might be the bearish factor. And today in the weekly report, in the fundamental part, we have tried to understand the core, the idea why this actually happens, and we try to put together all the information that we've got currently, that we have discussed in the previous weeks, now where we know what is going on in the stock market, on the Fed policy, on the debt market. Yesterday we discussed what is going on in the energy sector in the United States, and that gives us information to construct the whole puzzle and see what is going on. So also we today talked about the banking sector, what's the problems, and why in recent headlines in the news we see that many analysts appeal to problems and that banks could meet in the nearest future. And actually, this is also the subject that we have discussed in today's weekly report on the gold market. And recent performance, this performance makes us think, we're not sure yet, but it might be that investors starts to suggest something, starts to starts to see actually that the problems and the situation in the economy stands not as it is shown in headlines and as it described by the Fed in its assessment of the situation. It stands absolutely different, and they start to see for PMI numbers. They start to watch for sentiment, economical sentiment, personal consumption, and so on. And all these indicators shows clear signs of weakness. And that performance that we see on the gold today, it might be the first sign of the reversal. We're not sure yet. We need to confirm that. That's why we will keep watching on that. But we'd not exclude that it really could be the points that we were waiting for as a reversal reaction on the market, starting really deteriorating situation in the United States economy. So this is really a turning to the big collapse, and that might be the direction of the gold that investors starts to see this. This is by far just a theory that we need to check, but it's really big chance that it really the truth, and actually the negative moments starts to develop significantly faster than we thought initially. So in particular speaking, very interesting what will happen on the weekly chart, on the monthly chart by the end of the June, and we'll see what will happen. So in the technical side, currently for trading on the next week, this performance stands really great. It's definitely fast acceleration, and that makes almost unavoidable reaching of the OP target. So this is the next target that we'll intend to keep an eye on. It's 1907, 1970. This will be agreement. Although we've got the grabber that we have suggested, but it is not very useful to us because it already has completed the minimum target. So this top has been taken out. But also this is, you can see, bullish reversal candle that actually engulfs the whole previous session for a couple of weeks, and this is very important. Engulfing pattern here has been erased. This potentially tells that's another reason why market should keep going higher. Trend stands bullish. That's why we have the bullish context. And the next week, we intend to keep an eye on a chance to take the long position. At the same time, the nature of this performance tells that if market indeed bullish, it should not erase this recent rally. and even it should not drop too far. So preferably and normally, when we see the bullish market shows the progression, it could show the pullback to the nearest levels on the intraday charts, but it should not totally drop back to these lows. That makes our life easier, because here we could consider a few levels that actually should hold possible retracement. First one is 1856, which we think that it's most probable level. And why? Because actually market is not at the overbought, so it doesn't need to show the very deep retracement. Next acceptable level is 1841, 1844, or 1845. This comes from support. So if gold is really bullish market intending to the next target, these two levels should hold any retracement that happens here on the next week. And that two levels that we intend to keep an eye on, also for a potential taking the long position. That's what about trading and what levels we intend to keep an eye on. And just minor add-on to this analysis, if you take a look a bit from the different view on the follow time frame chart, you could see that we have a kind of the sideways channel. And based on this channel, here's for minor wash and rinse, acceleration to the upside. If you use the classical approach for the target estimation, you need the height of the this channel counting to the upside. You'll get approximately 1917. And if you'll take a look at the daily chart, you will see that 1917 is precisely the next destination point. So from that standpoint, definitely we're not considering taking any short position by far until this bullish context is valid, and we intend to keep an eye on these levels that we have mentioned to make the decision on possible long entry in the gold market.